All right, Bismillah. Let's just get into it. Just gonna review like Friday's trade and kind of like the process I would look to get into a trade. Call 7 fundamentals, proper preparation, hard work, patience, detailed trading plan for every trade, discipline, meaning like proceeding with caution, communicating those ideas with other people, or many of my situations, it's literally journaling my or properly documenting what I see and journaling afterwards. And these two kind of like sometimes come together in terms of journaling and playbook and trade setups, or just reviewing trades that I took or saw or have a setup for that I may have missed or only caught a portion of it, and looking to optimize entry or trade performance in the future. Anyway, Friday here we had news at 8:30. We had news at 8:30 on Friday, April 5th. Here we go. So we're just gonna get into dollar, and I'm just gonna document what I see here. And I see, well, from here you can see buy side liquidity was rated here. You can see that. Then we can see you have a volume imbalance here as well, and you can see here that price ran this swing low here. So that would be your break in market structure or your market structure shift. I usually just put MSS, but I'm gonna spell it out today if I could spell. So that's actually, I would say, for me, I like to put step one. Step one. So I'd look to see that first. Then this is what I like to see second. This is an entry model too as well. Once this happens, you can, maybe we'll see it later. I'm not gonna, maybe we'll address that later. Maybe not. Anyway, step one, step two, market structure shift, and we want to look for a retracement into an imbalance that on the price leg that ran the previous swing low, or that caused a market structure shift. So we can actually highlight that as well, just because why not, right? Let's see. I know. I just gotta update it. I usually spend most of my time on a 4-hour chart, and just doing this just as a formality. All right, so this would be the entry short on the dollar here, and also kind of like anticipating this on this day. And here's your eyeballing it, of course. That would be your optimal trade entry short. And again, I guess if you wanted to apply to this week forward, coming up, you want to see if it's going to hold below either this volume imbalance or this eventually this bearish fair value gap. Let's highlight that as well, even though it's kind of overkill. You kind of look over there and just see it for yourself, but see. All right, so let's just call it what we see. That's like too much talking here. I would prefer to abbreviate it, but anyway, let's bring that to the right hand side. That's also not necessary, but all right, so this would be for your short entry, OT entry. Your entry would be here. Stop loss would be up here. If I can stop loss would be up here. Then you got like some areas where you would shave off or exit at, right? But anyway, it's not the objective of, but it is the trade setup. Actually, two trade setups that I highlighted here, which was optimal trade entry and also a retracement into a fair value gap. If you did an institutional order flow entry drill, then on this high time frame, then technically you won't be in profit yet, technically, but that is a legit entry model. So you'll see. Lower prices on the dollar typically means higher prices on, let's say, the ES and the NQ and the likes. So you'll see if price is going to hold below, and you can drop down again just to see where we are. Let's just, don't need that on here. Let's take this stuff off. So this is where we are. Retracement into here. You can see it on a lower time frame. You can do same optimal trade entry short here. Just run up. So when you say OT entry, you're looking for an entry between 78.6 and 61.8. So that would be your entry here, short. It's below the 50% of the range, so didn't break any market structure on this time frame, meaning to the downside. So you want to keep keep my wits about me. It is inside of this reclaimed 1 hour fair value gap as well, meaning that it could actually pull back up. So for me, I would want to see if price is going to hold below this volume imbalance and ultimately trade outside of this daily bearish fair value gap. Okay. So anyway, point is here, we had a run up here, which is technically, the run up obviously was bullish, but ultimately the day was bullish as well for the dollar. But there was a divergence here that's not necessarily highlighted here. That's something I spotted on the 5 minute or 1 minute, maybe the 1 hour chart as well. Not sure, but we'll get to it. Anyway, let's go to the ES. And the ES, moving a little too far ahead of myself. All right, so here we have run on stops, and we have a market structure shift here, and we have a retracement into this tiny fair value gap here. And you can highlight this tiny fair value gap if you wanted to. All right. So that would be that. That would be your, of course, we highlighted the wrong day. This is like on Thursday for the short. Optimal trade entry short. Here, using this swing high, breaking market structure, retrace into this fair value gap. But ideally, you want a PD array that's above 50% of the range. In this case, this is not 50% of the range. It's obviously below 50% of the range. So you want to use something else to get you here, and that would be this. Actually, that's the wrong color, right? So that's for all the people that like the. There you go. Is the right one. Okay, so that's a trade setup in and of itself as well. Run on stops, market structure shift, retracement back into the price leg that caused the market structure shift, and looking for price to trade back into a discount. If you're expecting shorts, discount would be here, and that's how do you differentiate or distinguish discount and premium. Then you're looking 50% of the range. Yes, I do have a modified MACD on the chart here. Unless you know what you're looking for, it won't be too helpful for you in identifying this short entry. But here you go, right? Price holding below here, short. Price hitting this level here. You would consider staying in the trade. So let's say we drop down to a lower time frame. All my other annotations are still in this one. Yeah, it's not many, but the dark red would be, or pink, whatever you want to call it, would be what we just drew, right? So daily, as this day here, and it kind of just blasted right through there. We drop down lower. Then you can see more closely what I'm referring to. What day was that? This day here, right? All right, so these are the reasons to hold inside the trade, right? I would just blast it right through this fair value gap, the daily fair value gap. And all of this is, I think I managed this trade on a 1 minute, and that's what those are. But that's beside the point. We not get kind of like anyway. All right, so that's the 1 hour. That's the daily. It's the daily. We're back on the daily. So again, these are two separate trade setups, same parameters, essentially. And also how you can use OTE with a fair value gap entry model, right? And we wanted to highlight this, but you can see prior to this opening here, you can see that this gap was here, and also what we retrace back into the swing low that caused back into the swing low that for the market structure shift, right? So that's also a trade model as well, which we are we still can anticipate lower prices from here. But But yeah, I try to play it safe. I'm not saying I'm really not. People think it's like a hindsight game. Like if you like, I can't tell you what to do. I'm not telling you what to do. I'm not telling you what I see either, so you can say I tell you what to do. That happens in life quite a lot, right? I'm just pointing out what I see, and you can do what you want to do with it. You can call it hindsight because I'm pointing it out now, but you can do what you want, right? So obviously here we want to see going forward. If we do see lower prices, we want to see if price is going to hold below this. Um, you can call it a reclaim fair value gap, bullish fair value gap. And if it doesn't, it becomes an inverted fair value gap, which would be key resistance level. So right now it can either be a key support level or a key resistance level. You also look at this as an immediate rebalancing of this price range. Prior to this, when this candle opened, all this was a gap. So it filled that gap, and we can just go from there. Yeah. So all these X's here, just in case you were curious, this is just indicating that there was news all of these days here. Obviously there was news here. I kind of highlighted the 8:30 candle. If you drop down, you see it's on the 8:30 candle. Didn't want to get into that yet. Let's talk about the NQ on the daily. So we have a similar situation here. Run on buy side liquidity. I would count this. Technically, this here is the market structure shift. Here, retracement. There's no fair value gap, right? It's not the same as the ES, right? Not as clear cut, right? I don't care what people say, right? But some may think like, oh, you're reaching, right? What makes you, and this is why sometimes you have to analyze both asset classes, both vehicles. You're gonna analyze the ES, analyze the NQ, the dollar on your respective time frame. You don't necessarily have to go out to the daily, but yeah. So you have a market structure shift here, and then you have a retracement. Then you say, but there's no fair value gap here. All of this is balanced. So the question would be, where is it going? Right? So you have this wick. You treat wicks like gaps. That's one. So, and you can just eyeballing it though. So you can treat that as a level, 50% of the wick or any quarter of it. Now that's like, let's put some just dotted lines or something. That would be CE, consequent encroachment of a daily wick. All right, so there's your resistance. Right, that's based off of that. Boom. Actually, my eyes will actually automatically say what's going on with this thing here. And this is what my eyes would do. It would focus on this. But yeah, so it traded above that. It couldn't hold above it. Fell through. Boom. Now, so you can either use the one CE of, let's just leave it like that. And you can see now that price is holding below the CE or the consequent encroachment of this currently, right? That's where price traded into. Actually, we want it to be Anyway, that's close enough. You can look at it and see. You don't need to see how accurate it is and all those other details. Now, how long is this video? It's already 20 minutes. All right. Don't want to rush, but so where were we? You had the run on stops, have the market structure shift. They had the retracement into this range, here to here, and you're looking for a short entry. Likewise, this could have been a short entry as well. May not have been as clear because you do have the market structure shift of this, right? So, so that would have been, oh, matter of fact, I messed that up. Yeah, no, that's right. All right, so that would have been the break here, retracement here for that one. For this one here, boom, retracement would have been here for entry, short. Then you had to weather this retracement back up here, short again. But anyway, this is the market structure shift that I highlighted here. And we will put that on that. So here's your entry. Here you have you can count this one as, where are we? You can count this one as well, right? Market structure shift on this candle, and this would be your entry short here. So that's a couple of days work, but all valid. Right, so again, the price leg that caused the market structure shift. So this would be the more prominent one, especially since it disrespected this bullish daily fair value gap, disrespected it by breaking outside of it. And so we have a liquidity was rated, buy side liquidity rated, market structure shift. And again, the price leg that caused the market structure shift, you're looking for an imbalance above 50% of the range. Technically, we have it, but it's not in the form of a fair value gap. We have it in the form of a wick, in this case, the CE of a wick, or you can use this violated bullish fair value gap, which I hope will serve as a inverted fair value gap and send prices lower. So there that go. So I think I just kind of like didn't discuss Friday's trading yet, but whatever. Let's see what we have here. And now you get to see like, look, that's why did it stop there? Anyway, it's also holding above here. But anyway, so for Friday, we want to highlight, show pivots. All right, so anyway, you can do this here, show it all lit up, or you can just highlight the low or the high, the low high. All right, so and we can do both for now. Let's just leave it like that. All right, so we had the dollar on Friday at 8:30. The news was at 8:30. We had price running, galloping up, right? It's running. It's bullish, right? So bullish dollar is supposed to be a bearish market, right? Took out, you can see here, it took out the London low, didn't take out the Asia low. And this is a 15-minute chart. All right, so that's the dollar, right? Dollar is bullish, took out the London low, not the Asia low. Here is the Same thing here. The ES 830 candle took out the London low, not the Asian low. And you can generally do the same thing with the YM as well. Guess we're going to do that shortly. And now the NQ took out the London high, took out the London low, and actually based off of this, as you can see, took out the Asian low. Now this is what told me to expect higher prices, right? There's a divergence. The dollar is bullish at that moment. It's bullish at that moment, which means that prices should go lower. We have the ES so far refusing to go lower. We have the NQ went lower, took out the Asia lows. Shallow, but it still took out the Asia lows. And we have the YM as well refusing to take out the Asia lows. So that's the divergence on this time frame, which tells me that price is going to go higher as opposed to going lower like the dollar indicated. So let's take all these colors off. Take all these colors off. The point has been made, I think. And how does this work, right? So when you see, let's go back to the NQ, being that that was the laggard. How would you call it? It's the laggard? It's the leader, technically. It's the leader because it's telling everybody else, like, hey, we not gonna go lower. I went lower, you guys ain't go lower, so let's figure it out, right? So this was the laggard. Hopefully I'm saying it right. Whatever. Is right in my head. I'm not sure if I'm saying it right though. I'm not gonna spend time on that. So you see this run on stops. Now you gotta run on buy stops. So you're gonna delete that line. Have a run on buy stops. So step one. Then we have so step one, you can actually work off of the same time frame. But in general, as following the 2022 mentorship, once the run on stops happen, you want to drop down to a lower time frame and look for a fair value gap. And here you have a run on stops. Then you have a market structure shift here. Market structure shift. I'm not going to drop down yet because, and this would be your step two, your market structure shift. And you can see price traded pull back into this level here and then took off. Not sure if everyone would kind of see that, so you're going to stick to the rules. See that you go 5, 4, 3, 2, 1, right? 5, 4, 3, 2, 1. So here's the market structure shift. But you will start dropping down once you see this happen. Once you see the run on sell side, the raid on sell side liquidity. So there's nothing there. There's no, unless you want to do unless you want to do this here again. All right, so never made it all the way back down to 50%, and then it turned around. But yeah, let's just stick to the rules. I would go straight from, forget what I would do. 5, let's just follow suit. 5, 4, 3, right? No gap yet. It did use the midnight as a support, but that's not the topic. 2, then it's a bearish fair value gap. You can treat it as an inverted fair value gap. Either way, the stop loss would be here. And 1. So there's your stop run. Boom. Is that valid? Yeah, it is. Let me just pull that back so it could be clearer. Okay, boom. Okay, so, and there we go. We have an imbalance here. So now our market structure shift would be not right there. Go to stop run, and I would use this as an intermediate term high for me because of this gap here, and I'll be looking for a break above this, ideally for A plus entry. Right, so I would treat that as the market structure shift. I'm gonna treat this as the market structure shift, right? And then you would look for you're gonna use this, right? Below 50% here, but I'm an OTE trader as well, so I would do something like this here, right? So using this low, using this high, looking for entry or below 50%, ideally 61.8 or anywhere between this range here. Stop loss will still be here, and here is your combination of OTE setups and your fair value gap setups. And there you go. That was so almost coincides with 1.5 standard deviations. So there's a way to project this more accurately as well, but this is good enough. way better than good enough. So all right, so we use the divergence between the NQ, the ES, and we use the divergence between the dollar, the NQ, the dollar, the ES, the NQ, and the YM. NQ ran Asian lows, ran sell side. ES, the YM didn't. Even though the dollar was bullish at that time, its price should have went lower. ES, the YM refused to do so, which gave validity to a potential bullish run in the NQ, ES, and YM. And this is the setup. This is what it is. Over and over and over again. Like, everyone has a trading model, and you only use what's necessary. If you trade anti-patterns on the MACD, then there you go. In conjunction with everything else. So again, this ain't a fashion show. You have nothing to prove to anyone but yourself or your creator. However you see, whatever you deem to be valuable, that's the only one you have to prove things to. No one's giving you charity. No one. So, well, not many. So anyway, you got to do what's best for you, and if you see it, you see it. If you don't, work harder. Or get a mentor, right? Get a mentor. That's okay too. Ideally, I would say get a coach. You need a mentor and a coach, honestly. And I think I would rather be a coach though, because you got to bring something. I got a problem just handing stuff to people, you know. I'd rather tell you what to do, see if you're going to do it. You don't do it, then that's your problem, you know. Brutal. Sorry. I guess I'm talking to myself again. But anyway, that would be the NQ trade. I'm actually done. I said NQ and wrote EQ. Emotional intelligence. And I don't know. Well, I don't know where this came from. So this. Oh, this must be that daily. Anyway, just delete it. Same setup on the ES after the stop run. That And just to be clear, that stop run did not happen. This is actually me just marking out the low of the day. And I eyeballed it, so that's why it looked like it was running stops, but it didn't. All right. Anyway, actually, yeah. And this is a trade, the continuation of the trade, managed on 15-minute and managed on, I think, the 5 or the 1 minute still. So yeah, even if you miss this trade, you got multiple trades or reasons to add to the trade. But this would be the 1 minute fair value gap. Same situation, same rules. I would do this here. We'll call that an intermediate term high. Somebody else would say it's a short term high. And the only reason why I'm calling it intermediate term high is because it took out this imbalance. Then you got a market structure shift above that. So market structure shift. Bam. And this didn't run stops, but you have the divergence to support your entry. And this low to this high. So this low to this high, and optimal trade entry here. Right, that's good. Into this imbalance, consolidate it, ran up, traded back down into it. Again, did it again, and then it took off. Used that 15-minute or this 1 minute fair value gap as support. And took off again. So, yeah.